Welcome back to another episode of Around the Markets. I'm joined by Peter McGuire in his studio in Coogee. Coogee is the place to be for anybody out there that's not familiar with the Sydney property market. It's run hot for 20 years. It's running hotter now. Pete, you've invested well. You're well positioned. You've been enjoying the beach through lockdown, but now it's really time to deal with the what's next. We've seen COP26 come out. We've seen today, I think news is that President Biden is talking to Mr. Xi. But yeah, at the end of the day, Pete, what we care about today is what's next. And inflation has not been this hot since the 80s. Talk me through it.
Well, that's exactly right, Will. And it's been an incredible number, what we experienced over the last matter of a week or so, 6.2% for October 20 to October 21. And that was the US number. The more startling figure is if you use the same metrics as what you would have used in 1980, inflation, they tell me, would have been running at 14 or 15%. So high energy costs, high input costs as far as you name it. If you want to do a home renovation, wood, you're talking higher prices for zinc, for copper, for lead, for tin, for aluminium. Then you're talking all of those other components, higher food prices. And that really is impacting the consumer, the wallet, the size of wallet and the size of purse after these high energy costs are really stripping value out. And that's causing a fair bit of inflationary fears and worries. And that was demonstrated in gold last week.
We'll talk about gold in a minute, Pete. I'll come back and just one more, come moment on inflation, if you don't mind. That supply chain chaos you mentioned, it's not just restricted to the housing markets. We're talking shipping, transport, logistics, banking, finance, raw material costs. We're talking food. We're talking fuel. We talk regularly about oil, of course, and I think in Europe, gas is one of the energy sources that seems to be contentious from a pricing perspective. But Pete, if we're talking a bit about the inflation element, I mean, is any sector or industry protected from an inflation run?
I can't think of any because the costs are increasing. So there's the pay packet increasing? So if there's less, if you're not getting a pay rise, then you're really feeling it in your weekly and monthly budget because everything costs more. So that's the handbrake, and that's where this inflation story is really impacting Main Street. Mightn't impact the titans on Wall Street and your big income earners, but to the layman and the person on the street, it really is. And certainly we understand the concerns you're getting. Negative or zero interest rates in many countries for fixed deposits. So there you've got that inflation story. So the divergence or the differential between inflation and what you're getting out of the bank is monstrous. And that leads us to the next point, which will be naturally the increase of interest rates.
All right, talking about interest rates, and the banks are sitting there they've been obviously thinking about this for a while. It's a regular central banker story. What is happening with rates? We didn't see anything happening with rates in here in Australia at the classic November 2 meeting. That first Tuesday of every month usually coincides with the Melbourne Cup, of course. So there wasn't much that came down the pipe. Forecasting 2022, 23. I mean, when you look at the data sets, when you look at the positions being taken by traders around the world who often have a sense of what's going to happen because they've been mapping and watching this data. What's the view from your seat, Pete?
Well, that US dollar index, Will, has had a huge move to the upside. It's nearly at 96. We only spoke a matter of weeks ago, and it was that 93, 94 sort of handle, and it's been strongly bid up. So that's the US dollar index. That's one for traders to keep a close eye on. So that as that's rocketed up, that naturally impacts the other cross rates, Aussie dollar, yen, British pound, euro, and the likes of Canadian dollar and Kiwi dollar, to name a few. So keep a close eye on where the US dollar goes. Also, the energy markets, I think, have really come under a fair bit of exhaustion to the upside, which is an unusual. The consolidation phase, that hot air's come out, the fast money, the smart money was following it, and then all of a sudden it's just gone boom, and it's had a little bit of a wake-up call, and it's just sitting that I'm noticing Brent's now sitting at about 82.5, and WTI is about 80.5. So there we are from those energy complex. Worry about what's happening, as you mentioned, Will, as far as gas and a cold winter into Europe, and supply issues could really impact the consumer and the cost of energy.
Pete, I'm just, so as we're speaking here, just taking a little look at Bloomberg to see sort of, what's been flowing through on this. They've launched what they call the Pret index. Now, you can buy your sandwiches, your baguette, your coffee.
Pret a manger, isn't it?
Pardon, mate?
It was the Pret a manger. Is that
was.
correct?
I mean, I recall it 20 years ago, and in London being very, very popular, and it was a place to be, in the stations, on the streets, most street corners. Now, the interesting thing here is that Bloomberg's Pret index shows that transaction volumes in midtown Manhattan reached a pandemic high last week, and it's just 3/4 of a pre-COVID level. So clearly, people are coming back into cities. People are starting to return to the offices, certainly in New York City, and which suggests that Wall Street's got round about half of the traders back on the floor. So again, we're seeing just interesting indexes and interesting, if you like, signals suggesting activity, and I suppose all that bodes well for the Pret retail owner, with people back on the streets, people perhaps purchasing. They're starting to see a little bit of flow of money around the market. So let me talk briefly now about the thing that matters, and we've spoken at length on this for a long time. We talk about gold, we talk about yields. The headline on the chart that will be up on screen when we're talking about it will be that all that matters for gold is real yields. And what we're seeing here is that, as inflation fires up, real yields are plunging, gold's shining. I mean, talk me through where you stand on that position, Pete, what we think's happening, and is there a trade signal out there for people to go take a look at?
Well, there was a trade signal a couple of weeks back, and we made reference to that, and that was about the 4th, but I think about 1763 was the low on about the 4th of November, and we've had a high of about 1869. So it's $106 put on within a bit over a week. It's been a consolidation phase, and a lot of that fast money has probably profited from it, and now it's just finding its floor and seeing where it moves from here. So the signals moving forward, what's happening with inflation? It doesn't seem to be going away. What's happening as far as interest rates, and where's the story as far as US dollar? So roll all of those ingredients in. Many analysts are saying you're going to see stronger gold prices from here, stronger silver prices. So people are looking at that store of wealth, the uncertainty, buying physical, and all of those components. That's globally. And then we sit here and we wonder what the opportunity is. We've seen tremendous volatility this month, and we're only halfway through. So let's just see where the next matter of a week or two takes us. Leading up into that Christmas rally, do we get a continuation of a rally for US equities? And Santa Claus, by the looks of it, he's ringing the bell. And we saw the Dow up, we saw the Nasdaq up nearly 0.75%. We saw the S&P bid up at about 0.4% overnight. So they were all relatively nice moves to the upside.
Now, Pete, if we look at what's next, what's coming down the pipe, a burning question is really, it's all about the rally. Will it continue?
Yeah, well, that's right. Is that Santa Claus rally, and what's the story? Where are we as far as the inflation? Where are we as far as economic growth? And what does 22 look like? And everyone's saying, well, you're going to see interest rate rises across many of the countries. I wouldn't say that'll happen in Switzerland or Japan, because inflation needs to tick up there in Japan a little bit more aggressively. But many of those other markets are showing very high inflation numbers, and would be a great concern to any central banker.
Pete, just a comment on geopolitical tensions. We've got two theatres that we're paying a little bit of attention to at the moment. One's Taiwan and the other's the Ukraine. What are you hearing from around the desk?
Not a lot that's really transpired. That seems to, a lot of that hot air has moved out of that Taiwan situation. I'm not saying you won't see it re-engage, but at the moment it certainly subsided a little. And the Ukraine situation, also Poland, the ongoing concerns as far as border crises, border crises in America, border crises in Poland. All of those components, again, create, I think, a lot of fear, and that's something that I think any government needs to manage effectively and efficiently for its population.
Yeah, look, as I read read a couple of different headlines here, currently it looks like neither are likely to escalate into an actual war. But I think the reason for asking the question, Pete, is perhaps because the risk alone, maybe it's enough to boost the safe haven demand for gold.
Well, that's right. I mean, that geopolitical tension, Will, that you've got the inflation story, you've got the industrial demand, you've got the jewelry demand, you've had the Indian wedding seasons, you've got Chinese New Year, you've got Christmas coming around. No doubt, consumption, people haven't been traveling. The people that have done well during COVID, jewelry sales are increasing. I've read, numerous stories, high-end jewelry sales, and certainly watches that have precious metals in them, the platinums, the golds, the big demand, Will. So that story,
precious metals, I think it's a really good trade. Keep an eye on it. Pete,
yeah.
Let's wrap there. It's been a pleasure. It's been insightful, and mate, once again, it's great to have you on the show.
Look forward to seeing you soon. Thank you, Will.